It really does look like the AI bubble is starting to pop. Now, before you get the wrong idea, that doesn't mean AI itself is going away. What it actually means is that AI has been turned into an investment vehicle, a speculative asset, and that speculative wave is beginning to deflate. But the technology itself? It's here to stay. Think of it like the dot-com bubble. Back in the late 90s, everyone with a website idea suddenly thought they were sitting on gold. Investors piled in, the bubble grew, and then it burst. A lot of those companies disappeared overnight. But did the internet disappear? No. In fact, it became stronger than ever. It just stopped being a guaranteed get-rich-quick scheme. And AI is heading down that same road. Here's the crazy part, though. Right now, the US economy is being held up almost entirely by a handful of tech giants. Apple, Amazon, Microsoft, Meta, Nvidia, Google. You name it. The bulk of recent market gains aren't spread across the economy. They're concentrated in just a few companies, and that's not sustainable long-term. Real quick, if you're following along and finding this breakdown useful, hit that like button and subscribe. It really helps me out and keeps you in the loop on future deep dives like this one. Okay, so let's get into why this bubble looks so shaky. If it does pop, GDP could slide fast. The data already shows that without those magnificent 7-inch stocks, the rest of the market has been shrinking, meaning the real growth has been smoke and mirrors. If all that speculative AI money pulls out, it's not just Wall Street that takes the hit, it's retirement funds, consumer spending, and eventually jobs. And look at how investors are acting right now. The markets are so jittery that even Sam Altman casually saying there might be a bubble in private AI startups was enough to spook traders into selling. Same with that MIT report showing 95% of AI pilot projects fail. Neither of those should have been a knockout blow for public AI companies, but investors read the headlines, panicked, and bailed. That alone shows how fragile confidence is right now. Another red flag, spending on AI data centers is outpacing consumer spending as a driver of GDP growth. That's insane. Consumer spending is the backbone of the US economy, and if we've gotten to a point where server farms are driving more growth than actual consumer demand, you know things are tilted in a dangerous direction. Historically, the dot-com bubble wiped out nearly 80% of the Nasdaq's value at its peak, with trillions in losses. And back then, those tech companies were a smaller part of the overall economy compared to today. Now, Nvidia alone makes up around 8% of the S&P 500. Microsoft, Apple, and Amazon are even bigger. Meaning if this bubble bursts, the crash will spread wider and cut deeper than the dot-com fallout ever did. The system just feels unstable, like it's built for boom and bust cycles that regular people always end up paying for. Executives cash out with golden parachutes, while average workers and retirement accounts get wiped out. And that's the cycle every single time. And you can even see the fear in how money managers are positioning themselves. Vanguard, one of the most conservative names in finance, has already shifted its recommendation toward a heavier bond split, 70/30ths instead of the traditional 60/40ths. That's basically saying, hey, things don't look good. Play it safe. And if even they're sweating, you know it's serious. So the real question is, are we seeing the start of the AI bubble bursting? I think the answer is yes. The only thing we don't know is the timeline. It could unravel in weeks, months, or drag out for years. But when it happens, the impact won't be limited to Silicon Valley startups or venture capitalists. It'll spill over into the wider economy, into everyone's portfolio's 401ks, and even day-to-day spending power. So if you want to stay ahead of what's really happening with AI and the economy, make sure to like this video, subscribe, and hit the bell so you don't miss the next breakdown. Because trust me, this story is just getting started.